Interest rates keep going up, and the question on everyone's mind is, when is it going to stop? I mean, 2 years ago, the average one-year rate was under 3%. Today, it's over 7%. Same for a lot of the other rates. So where are interest rates going to go? Well, stick around till the end to get my interest rates forecast. I'm Ed, an economist here at Opes Partners, and this is Property Now. I'm recording this video less than an hour after the Reserve Bank announced that they are keeping the OCR, the official cash rate, at 5.5%. That does mean that some of the main banks got their predictions wrong. Now remember, the OCR is the Reserve Bank's interest rate, and it is very closely tied to mortgage interest rates. You know, if the OCR goes up, usually the 1 and the 2 year interest rates usually go up too. Now, the OCR didn't go up today, and that's a good sign for interest rates. But watch out for new inflation data, which comes out over the next week, because that could throw a bit of a spanner in the works. The Reserve Bank hasn't decided if it will increase the OCR one more time. They're factoring in about a 40% chance that they might, but if they do, it'll probably be the last time they lift it this cycle before gradually starting to bring it down. Now, that does mean that interest rates are very close to or already at their peak. And over the next few quarters, we should be looking at a very small decrease in interest rates. But how fast are they going to come down? ANZ say that the 1 year interest rate peaked in September 2023, around that 7.3% mark. They think it'll stay around that mark before dropping back somewhere between January and March next year, but they reckon it'll only come down by a smidge, and by the end of 2024, we could be sitting around that 6.8% mark. So interest rates might fall by about half a percentage point over the next 12 months. That's what they've got penciled in. And when I look at which rates they think will come down, it's mainly the 1, 2, 3 year rates where they think there'll be a wee bit of movement, not as much movement around the 5 year, and certainly not around the floating rate either. Now, when I've shared these kinds of numbers on social media, some people are surprised. They say to me, well, that's not as much of a decrease as I thought there might be. So interest rates will probably only come down slowly, maybe less than you think, over the next 12 months. But remember, a 0.5% drop in interest rates on a $500,000 mortgage, that's still $2.5K a year, or about $50 a week. So any drop in interest rates is welcome. But a lot of people are saying, well, why is it that interest rates keep going up? I thought they were meant to come down. I recently read this article where another economist, Brad Olson, was saying that banks need to start justifying why they're raising interest rates. And when asked, pretty much all of them blamed one thing: higher funding costs. In other words, it's not us, it's the market. Well, most of that is true. The banks get their money from lots of places, but they usually borrow off savers through term deposits, and term deposit rates really have rocketed by over 5 percentage points in the last 2 and a bit years. They also get their money from wholesale markets through swap rates. And again, those swap rates have really rocketed by roughly about 6 percentage points again, and they get some money from overseas. So it does cost the banks more money to lend you money today. And that's why they've put their rates up, because their costs have gone up. But it is also true that the banks have increased their margins. You see, back in 2020, their net interest margin was about 1.8%. Now it's gone up to an average of about 2.4%. So let's put this into perspective. Let's say your mortgage interest rate has gone from 2.5% up to about 7%. Roughly 4% of that increase is due to the bank paying more money out to savers. The bank's costs have gone up. But about 0.5% of that does come from the bank increasing its margins. And if you like learning about property in this really numbers-focused way, make sure you hit that subscribe button. We release new videos every Monday and Wednesday. And if you do already subscribe, stick around for my interest rate forecasts. Forecasting interest rates is notoriously hard. It takes a lot of thinking, a lot of number crunching, and your forecast will always be wrong. And that leads to people on YouTube telling you you're an idiot and you don't know what you're talking about. But Having said that, I'm going to throw numbers out there anyway. Even though I know I'll be wrong, I expect to be wrong, and I look forward to hearing your comments down in the comments section. Today's one-year interest rate is about 7.2%, depending on who you go to. This will likely decrease over the next couple of years. I think in 12 months we'll probably get to 6.6%, a drop of 0.6 percentage points. A year after that, by 2025, I think we'll probably be roughly around 6%, another 0.6% drop, before we get to 5% by the end of 2026. And then my standard long-term forecast by October 27, 4.5%. And check out some of my other interest rates predictions videos to see how I come up with these forecasts.